My name is Trip Gorman, and in this episode of Semilla.VC, I sit down with Alejandro Gonzalez, managing partner at Redwood Ventures, an early-stage fund based in Guadalajara and a managing partner at Santatera Capital, a global fund investing in emerging companies in the food and beverage industry, with a particular focus on those seeking to dominate the US market. In this episode of Semilla.VC, we discussed what Redwood Ventures does differently, Redwood's investment in Seeri, why he co-created Santatera Capital to capitalize on the future of innovation in the food and beverage industry, and much, much more. We discuss all of this and more in this episode of Semilla.VC.
Okay, Alejandro, could you start by telling the audience a bit more about your work history up to and including your current role at Redwood Ventures?
Sure. I'm a finance guy, so I studied finance, and then I made a specialization in management of financial institutions, and also certified as derivatives broker for the Chicago Board Exchange. So that's basically my background. I also have a diploma in justice from Harvard, and that's like my academic background. And so I ended up in venture capital because a few years ago, well, not a few, more than 20 years ago now, I started my company, then sold my company, and I went to the USA to study for a while. And when I came back, a teacher from the university was starting a venture capital fund to bring Mexicans to invest in Silicon Valley. He invited me to join. I met him during the sale of my other company. So he invited me to join in the process of, like starting a VC fund funded by Mexicans to invest in, this wave of Silicon Valley trends and everything. So we started fundraising for that venture capital fund. Back then, venture capital in Latin America was nothing. Probably, I don't know, maybe 10 funds in Mexico, maybe less than 10 funds in Mexico. I remember a few names, but probably half of them are still in business now. So it was very incipient back then. Long story short, we couldn't raise that fund. So we only fundraised like 20% or 30% of the target. And we ended up partnering with another VC fund from Mexico. And we took the commitments that we had and invited them to invest in this other fund. And we also invested in that fund as LPs. So my first experience in venture capital was as an LP, and also as angel investors, because I started investing in a few companies that I liked, mostly from Silicon Valley. A couple of companies. One, I had an exit very quick. I invested very small amounts, but I liked the fact that it was interesting, it was new, it was exciting. I could get a little bit involved. But in the end, what happened then was that our venture of starting a venture capital fund wasn't really fulfilled. So we started doing investment banking. So we founded a boutique investment banking back in 2013, and we focus mostly in real estate deals and venture capital deals. We fundraise for both of them, and also like middle market M&As. So as much as I liked it, I really wanted to, go back to the entrepreneurial side. It was more exciting than real estate for sure, and more fulfilling than M&As. So what happened is that a few years later, I met my partners at Redwood because they had an accelerator, and I was working as the financial advisor for a little bit more than 100 companies coming out of that accelerator every year. So we were talking, and they told me that they wanted to start a venture capital fund to, sort of like have the right capital and financing instruments to support the companies out of that accelerator, which is called the Reto Zapopan. And back then, I was like, I tried it. Like I really tried to fundraise a venture capital fund in the past. I think it is too difficult. With LatAm LPs, LatAm business people are very difficult to convince to invest in other entrepreneurs. And they were like, no, don't worry about it. Like we already have most of the committed amount. And I was like, really? Yeah. They wanted to fundraise $7 million. They already had 5. So we started Redwood Ventures with that. We eventually end up fundraising $8 million, and that was Redwood Fund 1. And I joined them at the beginning as a fund manager, and then we invested in 14 companies with that first fund. Then we raised a second fund where we are now currently investing. We have already 15 companies in that second fund. 9 investments in this year, so almost 2 investments per month, and that's what we're doing right now, and that's my current position.
I really appreciate that background. Thank you so much for that. I want to ask about Redwood Ventures, your guys' thesis, and what you guys do differently.
Yeah, so our investment thesis, basically what we look for are companies that are building technology that is strong enough to build entry barriers for their competitors, either through the complexity of the technology they're building or through the network effects that the technology is able to create. So that's the criteria for us. We invest in post-seed investments. So normally a company raises Series seed and probably then an extension. That's where we come for. We can invest in Series seed, but normally when there is like a late seed, like with a little bit more traction, our analysis process is very quantitative. So we take a really deep look at the data in order to analyze if there is product market fit or early signs of a product market fit. And that's how we invest. We invest industry agnostic. And I like the question of what makes us different, because what I believe is the main differentiator of Redwood Ventures is that we do not have any institutional LPs, because we don't. What we do is that we invest industry agnostic, as I mentioned. So none of us as partners have any broad experience to bring to the table in order to invest and really bring value to those companies. So we partner with our investors, with our LPs, to bring that value to the table. So we make a selection of different industries. We have 20 different industries that we focus on as a disruptor, and we go to the main companies, the leader companies of those sectors, and make like an invitation only to become an LP. So that way we can build a very diverse platform of value to bring to the table with the companies of the portfolio. So what makes us different is that we focus on creating synergies between the companies in our portfolio and the companies of our LPs. And we truly believe that that can give an edge at the early stage of a company, specifically in Mexico, where industries have a very unique way of working that is different from other countries, and you need to have a network and you need to have connections. So that's what we bring to the table. And that's probably our core value to the founders. And for the LPs, basically the 3 partners of Redwood used to be LPs in other funds. So what we decided is that we wanted to build a fund that we would like to be an LP of. So our experience as LPs in other funds were not bad experience, but very boring, maybe. So we wanted to make it fun. We wanted to make the LPs involved, actually bring value to the table, connect with the companies in the portfolio, get involved in the decisions, in the due diligence, actually help them. So that's how we work. And everything is very transparent to them. They know how the companies are performing. They can even connect with the founders. We have events every once in a while where we bring everybody to the same place. We have tequila and they talk together. So that's I think the main value for the LPs, that it is fun and they learn and they actually get involved in the management of the fund.
Amazing. And could you tell us more about the 3 different funds of Redwood, how they're different, how big they are? Was the thesis different? How is the team scale through all that? Tell us all about that.
Yeah. So the first fund, we were only 4 people, 3 partners and an analyst. And so that's the scale of that one. That was an $8 million fund invested in 14 companies. That's already done. Like, we have invested all the capital of that fund. And then we began Redwood Venture Fund 2 with a very similar investment thesis, but with larger tickets. So what we learned from the first fund, all the mistakes that we did, we tried to cover in the second fund, which is probably like the legal structure, the size of the investments, because we were making this really deep, comprehensive due diligence process. I think most of the the founders that have gone through the process of Redwood can relate and say, like, yeah, it is a pain in the ass. but we wanted to keep doing that, because that's part of what makes us valuable to the LPs. But we wanted to make it work, so we make the tickets 4 times larger. So that in the past we were investing tickets for on average 100 or 150,000, and now we're averaging 600, even $700,000, and we can go up to $4 million in a single investment. So that's part of what we changed a lot. And now in Redwood we have a team of 18 people. In different areas, from marketing, communications, analysis, back office, portfolio management, and so forth. And now, like, very, very recently, we started a third fund that we operate with a different brand, which is Santatera. We wanted to separate brands to avoid confusion, because Santatera is a fund that invests only in food innovation, in companies that focus their commercial goals in the US. So we can invest in companies from all over the world, as long as they have some commercial presence in the US, and we want to help them scale. That is a much bigger fund. That is a $70 million fund. And again, the same DNA of Redwood is in Santatera. All the investors are business people from the food sector. So we can bring a lot of value to the table through their connections, their know-how, their know-who, and help them with supply chain, distribution, even their ingredients that they use for their product. We can help them source it, and like a lot of things that we can do for the portfolio. But it's again the same, helping create synergies between the companies in your portfolio and the companies of LPs.
And can you tell us more about why you guys started Santatera?
Yeah. We have an LP from our first and second fund. We're very happy that all the LPs from the first fund invested again in the second fund, and 5 or 6 of them invested again in Santatera. So we're happy to have that in place. And one of them told us, like, hey, I really love technology. I really love what you're doing, disruption, all these things are crazy, but like, to be honest, what I know how to do is food. Like, my company is a food company. This is what I know. This is what I like. Why don't you explore making it a fund that is focused on food? And I would likely be the anchor investor for that fund. So we spent, I don't know, like 6 months on research to understand how that market works, where are the opportunities, where are the deal flow, and etc. So we ended up with an investment thesis that is what I just told you, focusing on food innovation with a market target or in the US. And there's a lot of reasons why, but basically it's because it is the largest market in the world for food innovation, and the barriers to enter that industry are way lower than anywhere else. So, for example, we saw that in LatAm, it is a huge market, but it's controlled by very few companies. And in the US, you have cases like, for example, I'll tell you one, Body Armor, just acquired by Coca-Cola for 25 billion. And like that brand anywhere else wouldn't be adopted because entering those distribution channels are very, very hard. My company that I sold, that I told you like 12 years ago, was a food company. And I remember it was really, really hard to get into a distribution channel because the competition was very unfair. And in the US, you have a market that is willing to try new products, is willing to buy a product because of its value and not only its price. You don't have like a limited amount of companies control 80-90% of the shelf. In the United States, you see like really big shelves controlled by an emerging brand, and you have all the distribution channels developed for natural channel, and then you have for example only supplements channel and nutrition channel. So you have already distributors working through in like for those retails, and a market that is like probably more educated in terms of what is good for them, and also with more like capability of buying those products. So that's why and we started with one LP that I mentioned, and in 3 or 4 months we ended up with a $70 million fund, because what we found is that I think it is related to the fact of what we mentioned, that LatAm is very controlled by a few companies, that like those few companies are really willing to invest in innovation, but they understand that the market is not probably in LatAm. So our proposition, it made a lot of sense for them. So they wanted to invest in the innovation of the world, in like food innovation in the world, focusing their commercial strategies to the US.
And now back to Redwood, I want to ask about your investment in the Seeri. And the only reason I ask is because it was the most recent. And I'm always worried about asking partners about their investments, because then the other partner founders get jealous. But we're asking about this one because it was the most recent. So why did you guys invest in them?
In Seeri? Oh, well, that's a great question, because Seeri was referred to us by another founder of the portfolio, which is actually like performing really, really good. So he told us like, hey, I happen to meet to know these people building Seeri, Felipe, Juan Martin. They are from my hometown in Cali. We all went to study to school together with the founders from Rappi, and the founders, like everyone, like that's crazy. You should dig a little bit into that, because the founders of all these really rapidly scaling companies went to the same school in Cali. So I don't know why is that, but I'm thinking about moving to Cali, and I'm bringing my children to study there. But they all were studying in the same school. They meet each other. So when I met Felipe and Juan Martin, I was mind blown. Like, they are such great founders with a great vision, great execution capabilities, focus on economics, everything that we like. Like great traction, great economics, great founders, great valuation. So for us, it was one of those like almost no-brainers in terms of we like this company. And when we started digging and analyzing the company, we realized that in Latin America, there is a huge need of companies like that that can make shorter the distribution chains between the brands and the retailers. So there is a lot of markets in LatAm that have a lot of distribution in between. So the like the price that the end user pays is probably 3 or 4 times the actual cost of the product. Sometimes even more. So and that is not because the product is so valuable. This is not an iPhone. I mean, like, this is probably makeup or like proteins or something like really simple, and the price gets so high because the distribution is so long. So you have the brand which exports the product to an importer, and then the importer to a major distributor, the distributor to a minor distributor or a wholesaler, and then to a retailer, and the retailer then this small for example, the person that owns a gym, or the person that owns a beauty salon or something like that, go to the retailer to buy the products, and then the end user buy it from the service provider, so all that channel, every piece of it takes probably 30 or 40% of margin. So when you add that up, it is like huge. And there is a lot of inefficiencies because all the logistics, because of all the payment methods, like there's a lot of inefficiencies in between, a part of the distribution. So what Seeri is doing is connecting the brand or the importer to the end user, and that way they can add more value to the brands and importers or the manufacturers, and also add more value to the companies that distribute the product or sell the product to the final user. And in the end, what ends happening is that everybody wins more, and the whole supply chain becomes more efficient in terms of timing. Like, you don't have to have a lot of inventories, you don't have to overstock yourself for certain products, you don't have to guess what's going to be the demand for certain product in 3 months, in 6 months, because you can buy faster. So there's a lot of efficiencies created by that model, and using technology to do it is just the right way, we believe.
And so I want to talk about kind of a macro question. How do you spend your days? So what percent, kind of on average, you look at a month, how much are you spending on fundraising? How much are you spending on talking to LPs? How much are you spending talking with portfolio founders, vetting deal? Like, to tell us a little bit more about that.
Yeah. It depends on what stage of the fund you are. So right now we're fully deploying capital in Redwood. So right now I would say my specific time is probably like 30% of my 24 hours. Well, I sleep like 6 hours, but like 20% of the work time for deal sourcing. So going to demo days, visiting some city, having events, or like going to an expo or something like that. So basically it's networking, building connections, and getting to like meet new exciting companies. Then like 50% of the time is analyzing the companies, which means having pitch, receiving the information, analyzing all the financials, analyzing the market, the team, the technology, and we do something, as I mentioned, that we try to create proof of concept for each company with one of our LPs. So it's very common that we also connect at this stage, we connect the LPs with the founders to see if they can become clients or distributors or, I don't know, suppliers or something like that. So to like sort of have the whole experience. And that takes us like probably the majority of my time. And then the other 20%, I spend it with the companies in the portfolio. Try to provide value to them, connecting with the LPs, connecting with someone that is very for me at everything, like probably they want someone that is good at marketing. So we have an expert in marketing, or at distribution, we have one. So since I'm not good at anything but finance, I had to connect them with someone that is better for me at everything else, recruiting and so forth. So that's what we do. I probably spend that extra 5% of my time, I don't know, you like put it from everywhere you like, in fundraising, because we're still fundraising for the last part of the fund. We're missing $2 million. So we're still fundraising for that. But it's my partner, Jean Paul, is more focused on fundraising and LP relations. So that's his part of the time. And my partner, Marco, is focused on back office, like tax matters, accounting, like everything that is boring. So Marco does that. And my focus is on sourcing, analysis, and portfolio management. So that's what I mostly do.
What are you most excited about right now?
Right now, I was about to write a tweet, but every time I write a tweet, I end up deleting it. But what I wrote is it me, or does it feel like the ecosystem is more solid and collaborative than ever? That's what I'm excited about. That in previous years, I didn't feel like the funds, the startups, the lawyers, the incubators, accelerators, universities, it felt like everybody were doing like, their thing and not speaking a lot to each other. And then the big funds, you're like all the big names with more than 100 million in assets under management, all like those guys were in another, sport, working like, playing alone. And the smaller funds like ourselves were in a different scale. And I don't feel that anymore. I feel like we are now like more collaborative. Everybody's like understanding their role in what they do, speaking to each other. And that's what I'm excited about. Like, I think it is a very exciting moment to be an entrepreneur and to be a venture capitalist. And my personal opinion is that it is really hard out there, but I don't think it is harder than it has always been for 90% of the founders. So for that big chunk of 90% of the founders, like it's really the same that it has always been. And the funds are focusing more in what they can bring to the table now than before. Before they were focusing, in their resume, previous companies, how well funded the company was. Did you have Sequoia in the cap table? Like, are you a YC company? Right now, not really. Like they're focusing in product, profitability, traction, back to basics. So that's what I like, that like good founders, unrepresented founder, underestimated founders, but good executors, they can now compete with the ex-Harvards and ex-Stanfords of the world because of how it is going right now in LatAm. So I really think that's exciting. And I love being active at this part of the momentum. I know that there are a lot of funds that are not active. They're currently fundraising. So we have a lot of luck. It is luck. I cannot tell you anything different, but we had good luck that we fundraised last year when everybody was deploying, and now we're deploying and everybody's fundraising, and it puts us on. I think it's an advantage to be active now, really, because like reasonable valuations, very good founders with like many options, and I really hope they have more options in the future, because I'm sure you've seen the statistics, but there are not many funds investing right now. And the one thing that is missing in LatAm, I don't think it's more capital, it's more people deploying that capital, or people with an emphasis in people, like, because if you have all that capital in just one person, that doesn't work. That doesn't work. You need diversity. You need more, like women managers in funds. You need more angel investors. You need more accelerators. So you need more diversity in order to do that. But right now, what I'm feeling is that it's collaborative. And like right now, if I want, to meet an LP, I probably call another fund and, hey, do you know an LP from Colombia that I can approach? And they will tell me, and I will tell them for Mexican LPs, and it's more collaborative. And in the past, it was like, no, this is my LP, get away. and so it is changing quite fast, and I think it's exciting.
I think it is certainly exciting. Okay, so finally, I'm going to ask the last question. Peter Thiel's famous contrarian question with a uniquely Semilla.VC twist. What important truth about Latin America do very few people agree with you on?
That's a good question. I think what I found that I tend to be a disruptor in some panels when I say this, but I think I'm not alone in this mindset. And again, I don't know if it is completely true, but for me, I think it is true. Is that it has never been a better time now to be a founder. And I think a lot of people disagree because there is no capital out there. But I think right now is a great opportunity to create business models that actually people want and they pay for it. And not only business models that are sustainable only with VC funding. And I think it is a great time to prove the quality of the founders and the people. Like if I were a founder, this would be a great timing to prove my value as a founder and not only my value as a fundraiser. And I truly believe that for those people that are able to understand the need of their customers, there hasn't been a better timing to be an entrepreneur than now. With everything that is going on, markets are going to change a lot. A lot of weird competitors are going to die, or end operations, because their business models are not viable. So it's a good opportunity if you are resilient to prove your value now, and that's something that I believe. And I know it's easy to say it in my with my position of privilege where I already fundraised last year, but I've seen a lot of founders. We see 30 to 40 founders per week, and wow, every week it gets more exciting. Really passionate founders executing and not only looking for the lights and the show and the recognition and an article in Forbes. No, they're actually building for their customers. They're actually building for their teams, for their stakeholders. So yeah, I love that. And that's what I think it is true now. Yeah.
Alejandro, thank you so much for taking the time to come on the Semilla.VC podcast today. I very much appreciate your time.
Thank you. Thank you, Trip. Have a good one.
Thank you for watching this episode of Semilla.VC. Make sure to like and subscribe wherever you view the podcast. Follow me on Twitter @GormanTrip. And be sure to check out our newsletter, Dealflow LA, which can be found by going to dealflow.la.